Today we are covering the core concepts of itemized deductions on Schedule A. The very first question the exam will test is whether a taxpayer should itemize at all. The answer depends on whether their total itemized deductions exceed their standard deduction. For 2025, you must know the key thresholds of $15,750 for a single individual and $31,500 for a married couple filing jointly. If a single client's deductions total only $12,000, the correct answer is to take the higher standard deduction. Let's break down the major categories you'll see on the exam. First, medical expenses. The exam trap here is the adjusted gross income floor. A taxpayer can only deduct qualified medical expenses that exceed 7.5% of their AGI. If a client has an AGI of $100,000 and $12,000 in medical bills, they can't deduct the full amount. Their deduction is limited to what's above $7,500, so only $4,500 is deductible. Expect a question where one answer choice is the full $12,000, designed to catch test takers who forget the AGI limitation. Next is state and local taxes, or SALT. This is a favorite exam topic. The total deduction for all state and local taxes, including property taxes and either income or sales taxes, is capped at $10,000 per household per year. An exam question will give you a scenario where a couple paid $15,000 in state income taxes and $8,000 in property taxes. They cannot deduct $23,000. The only correct answer is the $10,000 limit. Then we have home mortgage interest. The key number to remember is $750,000. Interest on home acquisition debt is only deductible on a principal amount up to $750,000. The exam will test this by providing a loan amount of, say, $1 million. You must know that any interest attributable to the $250,000 of loan principal above the limit is not deductible. For charitable contributions, the most common testable limit is for cash contributions to a public charity, which is capped at 60% of the taxpayer's AGI. A question might state a taxpayer with an AGI of $200,000 donated $150,000 in cash to their church. Their deduction is not $150,000. It is limited to 60% of their AGI, which is $120,000. The remaining $30,000 is a carry-forward, which could be another part of the question. Finally, miscellaneous deductions. The exam will try to trick you with old rules. Remember that the TCJA eliminated most miscellaneous itemized deductions, like unreimbursed employee expenses. However, some remain, such as gambling losses, but only to the extent of gambling winnings. This is a common point of confusion. To help remember the big categories, use this phrase: my taxes have charitable causes. This stands for medical, taxes, SALT, home interest, and charitable contributions. The exam also tests the strategy of bunching. This is when a taxpayer consolidates deductions into a single year to exceed the standard deduction. For example, a client who normally has $12,000 of deductions each year could pay their January 2026 state tax estimate in December 2025 and make 2 years of charitable gifts in 2025. This might push their 2025 deductions over the $15,750 threshold, allowing them to itemize in 2025 and then take the standard deduction in 2026. This is a planning strategy that frequently appears in exam questions.